Hey guys, it's Jenny Silver. Today I want to go over the frequently asked questions regarding the California Competes tax credit. This is the tax credit for California-based businesses in the amount of $20,000 up to $128 million that your business can receive from the Franchise Tax Board in order to help compensate you for hiring, keeping, and expanding employees for your business. There are two remaining rounds of applications for this tax credit starting in January of 2025 and again in February of 2025. Make sure that you mark your calendars and set all those reminders so that you do not miss the application deadline. The first question I want to go over is, can any business apply for the California Competes tax credit? Is the credit restricted to only certain industries or locations within California? California Competes says that any business can apply for the California Competes tax credit. The credit is available statewide to all industries. However, while there are no geographic or sector-specific restrictions, the purpose of this tax credit is to attract and retain high-value employers in industries with high economic multipliers that provide their employees with good wages and benefits. So, are small businesses able to apply for the credit? Yes, businesses of any size are eligible to apply for the California Competes tax credit. So even though they state that they're trying to bring in as many high value applicants as possible, meaning they could create the most jobs and the best wages, they also are looking at a variety of other factors as well. There is 14 different criteria that they're looking at when they evaluate your application, and they are considering small businesses as well. So apply for this even if you are a small business with very few to no employees, if you want to have employees and create those jobs. Next, is there a fee to apply? No, there is no fee in order to apply for the credit. How do you apply? The application is available at calcompetes.ca.gov during the application periods. How long does the process take? The process takes approximately 3 months, which includes the period when applications will be reviewed and presented to the California Competes Tax Credit Committee for approval. If not awarded a credit, can a business reapply? Yes, applicants not awarded a credit during the application period can update and resubmit their application in a subsequent application period. But if you are awarded the tax credit, can you apply again for another tax credit on that third application period? The answer is yes. If you are awarded this tax credit, you are welcome to apply once again in that additional February application period to receive additional funding. How do I determine if my proposed employee growth is in an area of high poverty and high unemployment when filling out the application? This program is going to use as one of their criteria for evaluating your applications, taking into consideration if you're in an area of high unemployment or high poverty. So those regions are going to receive additional priority and consideration as they're evaluating the applications. So how do you know if your business is located in one of those areas? The link to check your specific business address and see if you are in a high poverty area or a high unemployment area is available on their information website, which is linked in my description down below. Scroll all the way down to the bottom, and here you are going to find the high unemployment and poverty areas link. You're going to go ahead and click on this, and then you are going to see if your specific location is included in these specific areas noted here. What type of documents are going to be needed with your application? Applicants must use actual numbers from your payroll records for the most recently completed tax year for its full-time employees that worked a full or partial year. It will also be helpful to have a 5-year business plan that includes projected numbers for new full-time employees. So if you do not yet have employees, then you are going to rely on that business plan for projected numbers. If you have previously had employees or currently have employees, then you're going to make sure that you also include, in addition to that business plan for those proposed project changes, you want to also include your past payroll records. Next, what are the evaluation factors that are going to be taken into account for applicants? There's 14 different criteria that are going to be used as they are evaluating your application. This is going to include the number of jobs that the business will create or retain in the state, the compensation paid or proposed to be paid by the business to its employees, including wages, benefits, and fringe benefits, the amount of investment in the state by the business, the extent of unemployment or poverty where the business is located, the incentives available to the business in the state, including incentives from the state, local government, and other entities, the incentives available to the business in other states, the duration of the business's proposed project, and the duration of the business commits to remain in the state, the overall economic impact in the state of the applicant's project or business, the strategic importance of the business to the state, region, or locality, the opportunity for future growth and expansion in the state by the business, the training opportunities provided to employees, the extent to which the anticipated benefit of the state exceeds the projected benefit to the business from the tax credit, the extent to which the credit will influence the applicant's ability, willingness, or both to create new full-time jobs, commitment to treating workforce fairly and creating quality full-time wage and salary jobs, and the extent to which the tax credit will influence the applicant's decision to relocate jobs into California from states that have enacted laws that permit discrimination or deny or interfere with women's reproductive rights. So what if your business is currently out of state and you are planning to relocate it or expand it to California if you potentially receive this tax credit? Do you need to have a signed property lease or property purchase agreement already in order to provide that as documentation? Businesses that apply for the tax credit are not required to have an existing signed lease or purchase agreement, but applicants should have an idea of the general location in California because this will be taken into account during the Phase 2 evaluation of the application process. The applicant should also be able to demonstrate the finance mechanisms it has secured or will use to procure its facility. What types of taxes can the California Competes tax credit offset, and does the credit expire? California Competes tax credit only applies to income tax owed to the Franchise Tax Board. The credit is non-refundable. If the credit allowed exceeds the taxes due, the excess may be carried over to reduce the tax in the following year and the succeeding 5 years after, if necessary, until exhausted. Next, what is the minimum credit that a business may request? The minimum amount a business can request is $20,000. Additionally, the maximum that this program will be awarding is 20% of the overall budget, which is $128 million. If I'm awarded a California Competes tax credit, when can I claim it on my tax return? Each negotiated and approved credit agreement will specifically state the terms and conditions of when that tax credit can be claimed. So it's going to be on a per business basis. Whatever they write up in your contract agreement is the date that it will be. So what happens if an S Corp is awarded the California Competes tax credit? 1/3 of the tax credit may be utilized by an S Corp to offset the tax on net income at the S Corp level. The remaining 2/3 of the credit is disregarded and may not be used as a carryover for the S Corp. However, the full amount of the California Competes tax credit is also passed through to the S Corp's shareholders. Next, let's talk about the employment requirements. Is there a minimum number of jobs that must be created? There is no minimum number of jobs that must be created. However, the credit will be awarded on a competitive basis. Applicants should keep in mind that the primary goal of this program is to incentivize creation of high-quality full-time jobs. So how do we define a full-time job? A full-time employee is going to be defined as an individual that receives a W-2 from the applicant and is paid wages for services in this state, California, of not less than an average of 35 hours per week. Can new part-time employees be combined to fulfill the new full-time employee requirements? No. New part-time employees do not qualify and would not be counted towards the employment requirement. All the links to access this frequently asked question document, as well as all of the additional program information and the application, are available in the video description down below. Let me know what additional questions and information you want on this program so that I can create additional resources.